Good morning to all. And today we're looking at WTI crude, which has dropped close to 2025 April lows around what is this around the 56th level. It's Tuesday, December 16, and the market is pricing in a potential Russia-Ukraine peace deal against escalating tensions in Venezuela. With the NFP report today, of course, and major central banks like the ECB, the BOE, and the BOJ decisions later this week, volatility is about to spike. So let's break down the chart and the drivers together. We see that the WTI has been in a free fall. If we go and zoom in a little bit closer, since last Monday, we have had just one single day of in the green, right? And we are trading now above, let's say, the 76 support, 55.90 to be precise, in bearish territory. So the primary driver here is optimism over Russia-Ukraine peace deal, because there is reports coming up that they suggest progress in US-backed talks, which markets, of course, interpret as a signal that sanctions on Russian oil could eventually be lifted, and that would flood an already oversupplied market. So the narrative is pushing price directly toward the next support, which is the 55 level, and that would be the problem here that we are potentially facing, right? If we lose that level, then the next major support really is the 50 major psychological right level, because we don't literally have anything between there and lower down. Of course, there are some minor levels that we can take into account, but nothing really that is as important as the 50, apart from, of course, our 61.8 Fibonacci extension, which is around 52.50. This is from the top to the previous low and the swing high pullback level. But we're going to go to that again in a second. The important thing to look at here is that the RSI is still shows that there is more room to the downside to go to the 30, let's say. So the question is now whether we're going to actually lose that level, because it looks like one way or another this is a market zone. The first time we've tried, the first time we reached there, the second time we failed, right? Now there is a third time, and if that time we do get there, it might be a bit more risky than the previous two times, if that makes sense, right? Now, of course, this is the one scenario, and we're gonna look a little bit at the fractal situation here, because what I am also looking at, if we use the bars button here, right, you're going to see that from pretty much here to here, the breakout level, we've got this particular structure. And this, if we come and just tighten it up a bit, because we have to make it match, it is actually very similar to what we see currently, right? What we see currently, with a few differences, of course. But you've got the double bottom, you've got the peak, then you've got the consolidation with prices coming lower, near to the previous low, and then you've got the last leg to the upside. So essentially, if we use this fractal, and if this situation repeats in the lower time frame, what we might see is a bounce and then a breakdown. For example, we would be at this stage right now over here. So we would see that going down, it would form a double bottom, and then we would see a last leg to the upside and the continuation to the downside. It's essentially the same structure in a mini version. Okay, and what we want to do in this particular case, then, in that we want to see how much we corrected from the previous low. So we came up and we did the 50% retracement. So in case, and I repeat, in case we do see this coming back up, okay, we'll be looking at prices to stop around the 59, let's just say below 60. So the Medium and longer term here, technical pattern tells us potentially that any upside that stops, if we see an upside at 60, okay, it's likely to continue with further declines. And further declines would mean we go below the 100% of that leg. Now, for now, of course, we don't have a pullback top to take into account, but if we assume the 59 level, which is the 50% Fibonacci, right, that would come and bring us down to 53. So this is a medium term sort of idea, right? The 53. But the fractal relationship is what is important here. Now, in terms of a macro and technical clustering, right, or let's say confirmation, okay, um, if we look at it from a like bearish perspective, there is oversupply in the market, and there is also, of course, the situation with the Ukraine deal. If there is more news coming out that they are positive for the deal, then a breakdown it will be more likely. Okay. If not, we might see a, depends on when it comes, we might see a correction to the upside. Now, for us to see this pullback eventually taking place in the short term, we need to pay attention to particularly the US-Venezuela tensions because they are escalating. The US recently seized the tanker and threatened new sanctions, which would disturb the Venezuelan exports, and it could really take out of the market about 1 million barrels on a daily basis offline. Okay, and that would perhaps act as a bullish excuse me, barrier. But then we have the NFP today, right? And if we get a weak dollar from that, then we could, also watch for a bounce back towards the 60 line. But the question then is, what's going to happen with the NFP today, because it will have an impact. Okay, but the bottom line is this, that the path of least resistance is lower towards the 55 for now on peaceful optimism, but also volatility risks are huge. On the other hand, we've got the Venezuela sanctions, tensions, not sanctions per se, not yet at least, and today's NFP report that could easily spark a counter trend rally. So for me, in the short term, the target is at 55, and as long as we hold below the 60, there is further downside potential. In terms of course, we see, if we see a double bottom at 56, then we'll probably going to see prices going towards the 59.60. So for me, it's more of a situation of whether we actually take over 56 first or not, because if we don't, likely a bounce. If we do, likely 55. And if we get to 55, we have to reassess the catalyst to see whether we're going to break that or not. But typically, because it's a huge long-term support, we are likely to see at least a bounce first. But it might just be, kind of just very, very weak, if that makes sense. So yeah, manage your risks anyway. And this week is going to be very choppy.